Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. Today we're going to look at one out of the industrial sector, Wesco Industrial Products. It is December 26th, day after Christmas. I hope you all had a very, very Merry Christmas. Before we get too far in the video, if you can do me a favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. I typically put out a stock pick of the day video series video like this every Monday through Thursday when the market's open. I know this week, Monday and Tuesday, I did not. Tuesday was a little busy for me getting ready for the holidays. We have people come over, and then same thing the day before on Monday. So unfortunately with the holidays, a little shortened week. But again, hope everyone had a very, very Merry Christmas and have a very safe New Year that'll be coming up here next week. There's the thanks button down below for anyone who would like to donate to the channel. Buy me a cup of coffee there as well. Really appreciate anyone who can do that and understand those who can't. And very special to the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is the screener we will be going through on this video. It must meet 5 of 8 to make it onto my watch list. If it was a company out of the financial sector, we throw in price to book. You can use price to book for any company. Just don't blindly use one as fair value. If you're looking at a company outside the financial sector like this one, industrials, compare it to other companies' price to book to see where it stands. You can also look at price to book for the same company over the course of a year, 2, 3 to 5, or whatever you're looking at to see whether they are relatively cheap compared to themselves over the years. Now let's jump back over to Wesco Industrial Products. You can check them out at their homepage or order some stuff if you need to. www.webstaurantstore.com. That's www.webstaurantstore.com. That is their homepage where I pull this information from. Wesco Industrial Products. Work efficiently with Wesco Industrial Products. Since 1948, Wesco Industrial Products has been providing customers with high-quality equipment to better run their workplace. With years of experience, Wesco has perfected their items so that they are reliable and long-lasting. From their popular hand trucks and pedal lifts to their appliance trucks and scissor lifts, Wesco has become a trusted supplier of material handling products. Wesco Industrial Products creates equipment that is great for use in warehouses, storage facilities, and large stores. Their products help employees move heavy loads so that your business can run effortlessly and safely. Wesco products are an ideal addition to any business that works with items that are difficult to handle and transport. And here you can see from their webpage, there's a lot more there, but I just did a clip of some of the stuff that they're selling there. You know, you've got, Wesco Industrial Products for your docks. So you might have dock loaders. That's a seal around the overall dock doors, stuff like that. Wesco cargo products. There's some straps. Looks like they've got some Wesco Industrial Products drum openers. So you imagine if you were someone who gets a lot of oil, a shop that maybe changes oil, for example, buys it by the 55-gallon drum. You need something to open it. You buy it from them. There's some pallet jack lifts. I mean, there's a lot of different products here that you can see flat. Like you might go into a Lowe's or a Home Depot and see some of their flat pallets that you can roll around and pick up equipment. There's another one similar to what you might see over there, Wesco Industrial Products, carts and trucks. So this is the type of stuff that you might have this if you're working as an electrician, have all your tools running around the inside of a building, doing that sort of thing. Fans, if you had a leak in a building, you might have to order some fans. This is the type of products that they are selling. Look, here's some lifts for warehouses, cleaning materials, right? There's a bucket, you might get a mop to go with it so you can clean up the floors. That's the type of products. And then over here you can see, I like maps. If you've watched the channel any length of time, if there's a map that shows some information about a company, I am going to include it. A lot of times when we're looking at railroads, also in the industrial sector, there'll be a map of their rail lines that I like to include. Distributors are the same way. And Wesco is a distributor of products. So they have warehouses scattered across the United States. This kind of cool map shows where their warehouses are. Some out west by California there, a bunch in the east, down here in the south, not too far away from me in Michigan, down in Kentucky there it looks like, a couple down in Georgia and South Carolina it looks like, and then it tells you how far you are if you're going to ship anything, right? Whether you're 1 day, 2 day, 3 day, 4 day, or 5 day out. Looks like the only one that's 5 days out is Hawaii. So a pretty cool map there that gives you a little bit more information about the company. And why are we looking at them? Wesco International ticker WCC, out of the industrial sector, was down, and just down a little bit, not a lot down actually today, but everything pretty close to flat, a little bit up or a little bit down, nothing really crazy that I saw. But Wesco was one of the ones that was down at 0.17%, closed out the day at $180.03. So I thought it was a good time to take a look at them. 52-week range as low as $132.37, as high as $216.17. It is not within 15% of a 52-week low, which is where I like to start to look for a company if I'm interested in buying. It needs to get down to 152.22 or lower to be within 15% of a 52-week low, but it is closer. Well, it's actually a little closer to its 52-week high than its 52-week low. Market cap of $8.822 billion, a beta of 2.1. So this one is very volatile, twice as volatile as the overall market. Could possibly use that volatility to your advantage. If it's that volatile, it probably will hit its 52-week low at some point again. So it might be one to watch to see that happen. Again, 2.01, very volatile here, one being the volatility of the market. So this is over twice the market volatility. Price to earnings, PE ratio, the price that you are paying for $1 of their earnings. So you're paying $14.43 for $1 of their earnings. PE ratio sitting at $14.43. EPS is very high at $12.48. Earnings date, that one will be reported out sometime between February 11th and February 17th of 2025. Almost there. Not much left in 2024 here. Forward dividend is $1.65. They have a very low starting dividend yield of 0.93. We'll see their quarterly payout. They're a quarterly payer. We'll see that quarterly payout here towards the end. Ex-dividend date was December 13th, so we're past that now. It looks like they are going to be one of the last ones to pay out there right at the 31st of December. So you'll get that last dividend if you had owned them or did own them before the ex-dividend date on the 12th or before. If you were to buy them now, you're not going to get that next dividend, right? 1-year target estimate, at least according to Yahoo Finance, of $222.43. So they see it setting a new 52-week high over the next calendar year. Now, jump over. I like to look at dividend yield theory to see if the company is potentially showing any sign of undervaluation. Usually, we would look at their 5-year dividend yield average and compare it to their current. We can't do that because, unfortunately, this company does not have 5 years of dividend payouts. They have only been paying it out for a couple years. With one dividend raise, we'll see that here in a little bit. So, unfortunately, we can't use dividend yield theory on this one. Payout ratio is low, though, at 12.92%. Dropping down, we want growing free cash flow over time because typically if a company has growing free cash flow, they can pay down debt, make acquisitions, and make sure they have enough free cash flow to cover the dividend, to raise the dividend over time, or buy back shares, which this company seems to be doing a little bit of all of that. So, but their free cash flow is not growing. You see here going back to December 2021, $12.4 million. 2022, actually a negative showing here of $88.4 million. 2023, $400 million, back up, big jump up, and trailing 12 months so far at $794 million. They are repurchasing shares as well. Nothing in 2021, but 2022, $11.1 million, 2023, $75 million. And with this continuation of their increase in free cash flow, they repurchased at least so far in the trailing 12 months, 400 million shares in 2024, which I like to see that. They are definitely using that free cash flow to buy back shares. We'll see if they're doing it, efficiently or not. Jumping over to stockanalysis.com, this is just another source I go to. I do recommend more than one source, so you can make sure the information you are getting is accurate and up to date. Stockanalysis.com, one source I go to. You can go to any sources that you choose. Yahoo Finance was the previous page. That's another source I like as well, but there's a lot of them out there. I know some people like Seeking Alpha, and like I said, just a bunch of different ones out there. So you pick the sources you like. I would not just blindly trust one. They do have 8 analysts that have taken a look at Wesco, ticker WCC here. They call it a consensus buy. Low estimate of $175, which is just a little bit lower than where it currently sits, but would represent a 2.96% decrease from where it currently sits. Average estimate of $215.88. That would represent a 19.71% increase, and that's pretty close to what we saw with Yahoo Finance on the previous page, around 212, so a little bit higher than them, but not much. And a high estimate of $245, if it reached there, would represent a 35.86% increase from where it currently sits, and all the while you could collect that, just under 1% dividend yield. Now, I like to look at return on equity and return on invested capital to see how well a company is reinvesting back into itself. Return on equity, I'm looking for 10% or better here. They're at 14.03, so beats the metric I'm looking for there. But return on invested capital, I also want 10%, and they are only at 7.57%, so a little bit lower than what I like. Earnings per share growth, EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 5.37%. And revenue growth is listed at 3.16%, so they do see continued growth. Going to their dividend history, they are a quarterly payer. Payout ratio, again, very low. I think Yahoo Finance had them in the 12% range. Stockanalysis.com is calling it 13.26%. Either way, split the difference right about 13%. That is very low payout ratio. Dividend growth, they've only grown it for 1 year, but the 1 year grower was 10.13%. So if they were maintained, that's very fast double-digit dividend growth there. I'm not saying they're gonna, but that's just what the last one was. And with such a low payout ratio, and then you saw they were rebuying a bunch of shares, I don't know why they wouldn't keep that growth going. Buyback yield is positive, so they're doing it in opportune times at 2.48%. Shareholder yield is positive at 3.4%. They do pay out on the March, June, September, December timeframe like most companies do. And going back to when they started their dividend here back in March 2023, 37 cents, and March 2024 they raised it up to 41 cents. It's a fraction of a penny. I don't know why it says not applicable for this. They are still paying a dividend as far as I know, and I think it's still the 41 cents, and I would anticipate, based on when they raised it here in 2024, it would be around March that they raise it again. So if anyone owns this one, let me know. Maybe I'm wrong. Maybe they canceled the dividend or something for some weird reason. Like I said, payout ratio being so low and just starting the dividend, I don't know why they would. I'm pretty sure it's still 41 cents and some fractions of a penny. All right, let's check out the screener. Understand the business. That's where we started, right? They ship a lot of industrial products that if you are in the industrial sector or warehouse sector, you might be buying some of their products, even some larger stores there, especially around the cleaning stuff, I could see. Growing free cash flow, nope, we had the one down year. So no, it has been for the last few, but the one down year there, was it 2021, I think, 2022, wherever it was. Growing dividend, yes, though it only has the 1 year. So take that one with a grain of salt. Dividend payout ratio is under 75%, only around 12 to 13%. Dividend yield theory, we don't have enough to go on there. We need 5 years of data. It's only been paying for a year, 2 years in one raise there. It is not within 15% of a 52-week low, so no. Return on invested capital was under 10%. Return on equity was over, so you got to get both to get it. No check there. Earnings per share growth was over 5%, so we're only looking at 1, 2, 3, 4. It does not quite make the 5 of 8 it needs to make it onto my watch list. Though if you were to watch it and see it, drop to within 15% of the 52-week low there, then it would. It is one that does look rather interesting. It's similar to something like a Granger, a smaller version, it seems like, of a Uline or a Granger, right, where they ship you out some industrial products too. And it looks like they're growing significantly, at least over the last few years. Or at least their free cash flow is. I'd have to go and do a deeper dive to see what their margins look like, their revenue and stuff like that. But based on their free cash flow, they're growing significantly over the last few years. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. And drop a comment down below. Let me know what you think of Wesco. Is it in your portfolio, ticker WCC, or is it one maybe you're part of the downturn today where you're selling a little bit of Wesco as we left, or we're about to leave 2024 and head into 2025. Love to hear from you. And make sure you're subscribed to the channel. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Wesco you'd like me to cover in the Stock Pick of the Day series, drop it down there and I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend and a great new year. Tune back in on Sunday for our portfolio update. We did buy some stuff this week. We'll go over that even on a shortened trading week. We did add to the portfolio. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.